Here is a full breakdown of the top 7 high-probability trades from last week, and you didn't need a single fair value gap or order block for this. Number 7, Nasdaq 100 Futures Monday Aftermarket DR Session Trade. Throughout the video, pay special attention to this sound combined with a gem. You will notice why if you listen to what I'm explaining. Nasdaq starts the week with a long confirmation in the ADR session. The confirmation candle leaves an open magnetic volume imbalance behind that also aligns with the closing price and the IDR high. At 10:15 p.m., price returns back to fill that open whip and shows immediate rejection by pushing back outside the defining range. This is where you have plenty of time to look for other confluences to support a long trade idea. We have some nice volume imbalances currently holding price from pushing lower. For targets, we have the next SD level of 1.5, but more obvious is the open magnetic whip here, which should definitely be considered to be rebalanced at some point. This is how the trade would look like for a possible 3R. Lots of time to execute. There's literally no excuse for not planning and taking this trade. Number 6, Gold Futures Tuesday Regular DR Session Trade. The day starts with a false session in the ADR extending to the upside and then followed by the ODR with a bigger DR box than the ADR. False sessions are totally normal and happen. The DR true percentage tells you how many times price closed above the defining range on a 5-minute time frame and never closed below the opposite side of the defining range until the DR session ends. The same rule applies to DR short confirmations. Statistics show that gold, for example, has had a 73 DR true percentage for the ADR, a 82 DR true percentage for the ODR, and a stunning 95 DR true percentage for the RDR in the last 1,981 DR sessions. So that basically means out of 100 ADR sessions, there can still be 27 false sessions happening. In the 1-hour transition time window between the ODR and the RDR, price finds support from an intraday gap imbalance combined with a volume imbalance and pushes higher. The opening of the RDR session is not only interesting because it is indicating a model to the upside, but it also finds strong support and a willingness to go higher from the intraday gap imbalance of the ODR. Price then confirms longs with a higher probability for the session. We have 2 open magnetic whips inside the range which should not be ignored. Price tries to go below the closing price and the IDR high here but fails and closes above the DR again. At this point, you can definitely look for your first bullet for the session to get at least 3R. Entry at the next candle's open, targeting the 1 SD level. If this setup would have failed, there would be another great opportunity combined with the open whips inside the range and the cluster to the left as well, which also lines up with the RDR mid. This setup would give you an even better risk to reward. That's why I always emphasize to mark out previous whips and especially pay attention to intraday gap imbalances. Let's continue with number 5, Euro versus the Australian dollar, Monday regular DR session trade. The regular DR session confirms longs and immediately returns towards the IDR mid and clearly rejects it. Price almost reaches into the retirement setup area and pushes higher. The first bullet right after this candle would result in -1R, but at this point we get a retirement setup and can place our trade with stops 2 to 3 pips below the DR, targeting the 1 SD level to get at least 3R. Price rejects the opening price of the RDR clearly and finds its way towards the 1 standard deviation extension. A very basic but rewarding DR trade. Join me as I teach thousands of students how to trade like a professional. Learn how to trade the DR trading strategy combined with data, get access to exclusive tools and indicators, weekly live trading sessions where you also get deep market insights, which have never been taught in the retail space before, and a lot more. Visit m7dr.com for more information. Number 4, Gold Futures Thursday Aftermarket DR Session Trade. The new trading day starts and leaves an open daily gap imbalance. This should be the first thing to mark out if you trade the aftermarket DR session. We get a red ADR box, but price can't close below the DR on a 5-minute time frame for a short confirmation and finds its way above the DR, confirming longs with a higher probability for the session. It's this intraday gap imbalance right here, which has been created within the first hour of the ADR, that acted as a support for price. Price pushed higher and rebalanced an open whip here before returning back into the DR for a retracement. The daily gap imbalance also acts as a restricted area. This was very hard to trade right here, but there was plenty of time to plan a high probability trade setup before price came back to the opening price. The stop can go 2 to 3 ticks below the recent retracement low here, and as a target we have definitely the 1 SD level lining up with the previous RDR session low, but also open whips above, which could be used as a potential target and trail towards. One open magnetic whip also lines up with the 2 SD extension. That's 3R if you go for the 1 SD and 5.5R if you go for the 2 SD. Number 3, S&P 500 Futures, Tuesday regular DR session. Before I continue, I would really appreciate some feedback. Leave a like or a comment and let me know if you enjoy these kind of videos and want more. First of all, we have a false session in the ADR and the ODR where price closes outside the defining range in both directions. The RDR then gives us a red DR box. Looking at the bigger picture and where price came from is definitely helpful here. These gap imbalances from the ODR session were broken and turned support. They are restricting price to push lower, and with all 3 DR session boxes in comparison, we can see a range expansion model forming. We don't know in which direction we look to trade since we don't have a DR confirmation to either side yet. Price pushes higher and confirms longs with a higher probability for the RDR session. Targets are already clear now. We aim for 1 SD in a range expansion model if we get a nice setup. Price retraces back into the DR and rejects the IDR mid combined with the opening price. This is your entry right here. Stop below the closing price and let's go. Stopped out -1R here. We get a new retracement low reaching into the retirement setup area, and looking at the tick grid doesn't really help here. This is where you carefully plan your second bullet for the session and wait for clearer signs. Price rejects the IDR low and came back into the retirement setup area. Now it's time to wait for a nice entry. Latest at this point you should think about an entry. The ADR gap imbalances are showing a nice rejection here as well. Remember what I've said many times. The intraday gap imbalances from the ADR are very important, and especially when the ODR breaks the ADR levels, they can be super helpful for the RDR. Stop goes 2 to 3 ticks below the DR. What else is supporting the trade right now? Look at the tick grid. We can't find a way below the closing price, and tick is reaching the lower extremes here, showing a divergence in price versus tick. 5 minutes before the RDR session ends, price reached the target of 1 SD. Number 2, gold futures Friday aftermarket DR session trade. The ADR opens and immediately pushes lower very aggressive. An intraday gap imbalance right before the ADR box acts as an extra confluence that price will most likely not go above the DR high for the session. Another small but beautiful detail. 40 minutes later, we get a short confirmation with a red DR box and can look for short trades. There are also no open whips inside the range. Price rejects the IDR low here beautifully. Now here's the key to a possible trade setup right here. If we go back to Tuesday's price action from here and did a great job at marking out previous intraday gap imbalances, you would have such a nice extra confluence for taking a trade right here in the Thursday ADR. Stop goes definitely above the gap imbalance cluster, and we can aim for the 1 SD level or minimum 3R. Look at how important the intraday gap imbalances from Tuesday were for this setup. Lots of time to take a trade right there. The session ends, and at this point you can either exit your trade or be conservative and put your stop to break even or right above this intraday gap imbalance. If other things align and support further downside, you can definitely trail your stop aggressively and aim for bigger targets. This open whip pushes price lower, and with the short confirmation of the ODR, we also reached our target. With the short confirmation in the ODR, you would also have more reasons to trail your stop for further downside, but that's up to you. 3R is our minimum goal for a trade. And number 1, who would have guessed it? Russell 2000 Futures, Tuesday regular DR session. The ADR and ODR both had a false DR session. With the RDR being formed, we can see that we are in a range expansion model formation. We get a DR long confirmation at 11 AM with a green RDR box. This right here is a valid setup with the tick grid divergence and also a previous whip that is being rejected. Time-wise, it is 12 p.m. now in the regular DR session. Let's have a look at historical data together for this scenario and how you could have banked 9R out of this trade with a very high probability. If the Russell 2000 futures on a Tuesday in the RDR confirms longs between 11 and 11:15 a.m. based on historical data, you can expect a shallow retracement with price not going below the minus 0.2 retracement with a 70% probability, and after 12 p.m., 70% of all retracements are done. So this candle right here is with a 70% probability the lowest retracement for the session, and also 70% of the time price reached 1 SD. A time and price trade based on data would look like this. Price continues higher, and at this point right here, we get a good indication that price wants to go even higher. While rejecting the plus 0.5 SD in price, tick grid also reaches the lower extremes. And finally, we reach the 1 SD level, banking a nice 9R. I hope you gained some nice insights of what to look out for when trading the IDR Basics. Everything I've shown you in this video can be found in my free YouTube videos, except the last trade in the Russell 2000 futures market, where I wanted to show you the DR trading strategy combined with historical data. Have a great trading week and see you in the next video.
We're gonna take on the world.